Okay. Alrighty. So the last time I streamed, we were around here. Boys, it is getting spicy. So let me zoom out first and just show you the relative volatility that we've seen in the past. And the fact that Bitcoin, for the most part, as you guys know, pretty much all of the month of December and the last couple weeks of November, hasn't really been moving too much. So what does that mean? It means that we have more and more invalidation stacking in the same spot on the short side. And now, as of recently, with that tag of the low, we have more invalidation stacking up on the long side as well. So the next move should not only be volatile, but should also have some legs to it, meaning it's not just going to chop like this. It'll likely lead to either popping the top first and then a big drawdown after, or depending on what happens down here, taking out the bottom side first and then seeing if there's any life here. Now, the good news is we have some breathing room on the bottom side, but the fact that we keep making these insignificant higher highs, like I mentioned in previous streams, is obviously no bueno. So in the last couple days, pretty much a week now, we've stacked liquidity to the bottom side locally. Okay, so basically to make it simple, all these equal lows, all the longs are sharing the same invalidations if they opened up their longs since the start of the week. Now, we also want to look at the distance between the lows relative to the distance between the highs. There is a world where we catch it here and we don't form equal lows, was what we printed at the beginning of the month. This was on the 1st of December. The only issue with that is there's not really any high time frame confluence that backs that up, and there's not really any local confluence that backs it up. So this is like it'd be very abnormal to see a bounce here. I think once we start clearing these lows, if we start clearing these lows, I think it kind of confirms that the probability of going lower underneath 80K is going to happen. But if something weird does happen, something abnormal that shouldn't happen, that's an important spot to pay attention to, right? So if we start wiping all this out, the probabilities of us going lower than 80K, in my opinion, is higher than going above 95 again. But if it does hold, that is kind of weird. And so we could see a big move to the top side after that. So the question is, what happens after we've flushed out the rest of the long liquidity that's been building this week? Will there be enough spot demand that comes in and absorbs it? Or if not, then we'll know. Because what's the issue that's happening right now? While we are making new highs to get a gauge of what the supply and demand is, we haven't had a clear move outside the range to really get an idea of what the true supply and demand is. So it's hard to tell who's in control right now. You can look at little things like fluidity, which both sides, even today, as of recently I'll show you, have shown decent fluidity. This move here, which happened on Wednesday, FOMC, showed pretty strong fluidity from the bears. So what that means is just when we test key levels, or when the bulls move into bear territory, to paint a picture for you, how did the bears respond, and is it a decisive victory? And we just had the same thing happen in a really tight range on the bottom. The only issue is in both these scenarios, and it's not really an issue, it's actually an opportunity, but I'll explain. So because these things happened, we know where people's invalidations are. We know where it's likely that people will capitulate on active positions, particularly in the leverage markets. So the reason why I guess I said it was an issue is because since we've tagged both sides quite nicely, it's hard to get a definitive bias there. And then also, we have to sort of sit on our hands and wait for these bigger opportunities to sort of size up. And of course, in either one of these scenarios, whether or not we clear the highs first, we want to see if we hold it. If we don't hold it, then obviously we'll be able to see an imbalance of supply and demand here, or lack thereof. And then same thing here, right? We're either going to be able to hold it when it flushes out the lows, or we're going to go low. But both of these scenarios, depending on what happens here, and depending on what happens here, I think should lead to a bigger move. because what happens is people that have invalidations down here, some of them are going to be static or down here. Some of them are going to be static, and I should mark this out as well. But others are going to start ratcheting their stop losses into profit or have trailing stop losses into profit. It just depends on how long we spend in these areas. So the longer we spend, the trailing stop losses will start to catch up and start to squeeze and cluster. And then also people who manually move their stop losses as well. And then there's people who don't, right? That's also true. But the longer you consolidate, what does that normally lead to? It leads to bigger volatility. And that's the reason why that happens is because these invalidations, whether they're mental invalidations or actual orders, start to become tighter and tighter and tighter. Volume has been decreasing lately, and that's to be expected because obviously we haven't had any big moves in the last week or so. But I expect that volume is going to return back to the market depending on what happens here or here. And again, this is going to be, I think, a much more critical spot to pay attention to if it does happen, because not only could we go underneath 80K on Bitcoin, but then we sort of we start to question the high time frame bull rally that Bitcoin's been in for the past 3-4 years now, right? That starts to come into question what down here. And I know that's a pretty far reach because it might seem a little insignificant what a move down to like 87K from 90K could be so significant, but it really comes down to the structure. And like I said, moving low here, there's not much that supports it. You know, if I was to zoom out and show you, there's not much from over here that really supports holding it when it comes to previous structures and looking at the data from over there. So that's concerning. The silver lining to that is it makes it really fucking obvious if demand is actually outweighing supply, even while not taking out any of these lows, like not even going below 80K, we can still get a general idea of what the supply and demand is on the market while trading inside the range as a result of that. The reason being is because if there's not much saying that we should hold this, and then it does hold, that shows that there's a lot of sticky demand here that maybe we're underestimating. And then of course up here, I mean, there's not much high time frame for the bears either. We're kind of sitting in an area now where these next moves should be able to determine what's likely going to be happening in the near future. Now, you guys know I don't like to time it, but if I had to, I would say at least the next couple weeks to potentially more than that. If it's hard to tell, it's always the bears. As far as liquidity is going, the market isn't really sure either right now. You can see that there are icebergs forming on both sides, but they're quite wide and they're quite thin. So, you know, people are speculating by setting up icebergs, but they're very far from the price, and there's not very much of it. As far as liquidity is concerned, liquidity has also been rather shallow, which is kind of concerning. There's moments where it pops back up and we start to see liquidity reminiscent of times earlier this year, but overall it's a little bit concerning. As it stands today, the only play that you could do as of right here, right now, is to long it. But like I said in previous streams, and those longs usually work, but it's spooky, right? Especially if you're trading with big size, because of the slippage that you could incur when we have all these lows pretty much the whole week. If they had longed Bitcoin this week and they have a local invalidation, it's sitting right here, man. And you can see it start to build here. Let me show it to you. So if I zoom out, and keep in mind this data is a rough estimate, which is why it's better to use the price, but you can see that invalidations are starting to build on the at these lows more and more as the week goes on. So, you know, yesterday and the day before they started to build when we were down here, and now that we've revisited it, we got even more starting to build. So we're sort of, as you can see, we're starting to close in here where short invalidations are stacking up at the top, the local top. Long invalidations are starting to stack up at the local bottom, and as a result, we should see a lot of volatility in the foreseeable future. Now, it is possible, I don't like to time the market, it is possible that we just do this kind of shit for, you know, the next week or so. But by the time we get a breakout, it should be a decisive action where we're going to have a good idea of where this trend is going. So I know it's been frustrating for the people who are a bit more beginner at trading because the price has just been doing this. It's just been bouncing between ranges. So if you're not taking profits, or at least, moving stops into profit, it's going to come back. The price usually comes back and takes you out, which can be frustrating for beginners. So we should have good conditions for even beginner traders in the foreseeable future, whether that be long or short, depending on what we see here. So this is important because if this does break and we can't get a reversion back to the mean at the very minimum, then it's gonna slam the alt markets. And I'll talk about it in a minute here, but particularly with Ethereum being at a really critical spot, it's important that we see, at least for Ethereum's sake, and honestly the rest of the alt market's sake, that we see some sort of life out of Bitcoin down here. And it's spooky to me because there's not that much high time frame confluence to really back up any kind of support that would be found here. So technically the best case scenario for the bulls, and which is going to seem intuitive, would be to just pump it. Not only pump it, but you have to hold it. Showing an imbalance of supply and demand here. If we get another insignificant higher high that prints here, that could be pretty detrimental. So there's sort of four scenarios you see here. The two major ones are dipping into the supply side of the market or dipping into the demand side of the market. And then the two scenarios that could potentially follow after that, which is either holding it, which would lead to lower, or sort of that bounce back. And unfortunately, there's more scenarios that point towards a bearish move than a bullish move. However, the scenarios that point towards a bullish move are still quite strong. So I don't know if I explained that well. There's more things that could happen in the chart that would lead me to being bearish, but the things that would lead me to being bullish, I'd be a very bullish on, because it means that we're going to squeeze out some bigger shorts here. So that's why we have to just pay attention to it and take it slow. But I'll come back to Bitcoin here in a second. I'll leave it up on the low time frame while I talk about other stuff. I will talk about Ethereum today because it's in a very critical spot. But let's have a look at Legacy, because if you guys saw, the stock market is taking a pretty big beating here. Nothing too major, but obviously we had a decent drawdown for a day on the stock market. I told you guys at the beginning of the week, don't be too surprised if you see that. Obviously, when I zoom out like this, it doesn't look very significant, but it was a decent amount of volatility, and it did come in prior to making a new all-time high. So really close to making an all-time high, but didn't manage to do so. As far as the volatility index is concerned, though, the structure is still broken on the bottom side, which is a good sign. So basically, as far as the S&P is concerned, as far as the VIX is concerned, the S&P should continue to go up. The VIX should continue to slowly trail down. In the event that is not the case, I believe I commented about this on earlier streams, but in the event that that's not the case, it's gonna, raise a lot of red flags and be very scary, because usually if something is a higher probability of happening and then it doesn't happen, that's usually a moment in time where it's very important to pay attention, because it could lead to something that has legs to it. Meaning, if the S&P is still geared to go higher for the most part, I mean, we could dip into the void a bit, particularly next week, but if everything looks good for the S&P to go higher and then we see a wave of volatility come in, that's like irregular heartbeat. That looks pretty detrimental, particularly with all the context that we look at the VIX. But I'm not going to go through all the context because I've gone through it multiple times in the past. But just know that the VIX over 2025 has shown slight signs of an unhealthy market, and it's only slight signs, so it can be mitigated. But if those signs continue through abnormalities, then of course it's time to be a little bit more concerned. Okay, but yeah, so far the stock market, in a nutshell, I think we could see a dip. I'm not expecting a big one, so it's still smooth sailing. It is unfortunate that the S&P had a bad day today while Bitcoin was sort of in a critical spot, and that continues to sort of happen. So obviously the market sentiment coming from the S&P is going to hinder Bitcoin a bit, and that's been quite unfortunate for the crypto world. Gold has surprised me. So we saw sort of an abnormality come out of gold, which means that we should be smooth sailing on gold. There's a lot of technical factors that pointed towards the possibility of a pullback on gold and even going below 3,900. But the fact that that didn't happen so far is a really good sign. Not only that, depending on where their expiries are at on gold for the futures, but all the short sellers are in the same spot now. So we've got a bunch of equal highs on gold. Again, those little abnormalities that we see, something's more probabilistic to happen, it doesn't happen. That could lead, that should be paid attention to because it could lead to something with legs to it. So yes, volatility hit gold, and I've told you guys this a million times. If the S&P sees a spike in volatility, everything's going to feel it, right? I know there's a lot of narrative out there about uncorrelated assets, and certain assets are less correlated with each other than others, but they're not completely uncorrelated. And that's what you saw today. And you'll see it in the future again if we see volatility slam the market. Is you might think like, okay, well, I have gold as my hedge, right? Against equities. It's kind of a hedge, maybe in the long term, but if volatility gets high enough, as I've said in the past, it's not really a hedge because, fear spreads like a wildfire. Anyways, gold looks a lot better now. It held where it needed to. Technically, the structure's fine. Any breakdown of here on gold, and we could see sub 39, but the fact that we were able to get close to the previous all-time highs on gold means that all the short sellers are now dogpiled in the same spot. Remember, guys, just keep it simple. If they had shorted gold at any point, and now that we were at all-time highs, literally at any point, if they had shorted gold, then they should have been invalidated in the last couple days on this move to the high. If they're not invalidated, where are they? They're resting above the all-time high. So that sets the stage for a nice move on gold. It's a really good sign, right? It's not guaranteed, remember, it's all just probabilities, but all short sellers of gold are now dogpiled in the same spot, meaning if we can crack that, they have to likely will start to close at the same time, which leads to a bunch of buying. Anyway, silver also had a wave of volatility hit the market. It hasn't recovered as nicely as gold, but I'm not too concerned about it because it has plenty of room to breathe. So silver obviously is down a pretty good chunk today, and the volatility is rather strong. This will likely lead to an extended period of consolidation. So unfortunately for the silver guys, because of how much volatility came in, it doesn't mean that it's going to dump significantly. In fact, I don't think it's likely that's going to happen. But what it could mean now is that silver consolidates for an extended period of time, right? Like things that we've seen in the past when volatility slams the silver market is it stops going upward only and starts to just sort of chop for a bit. What do you think about the crypto market at the moment? I just went through that, but I'll talk about it a bit in a little bit. In terms of what I will say about where we're at in the crypto market is there's going to be a decisive move soon. Whether that's up or down, there will be a move that's sort of, because we've been consolidating for so long and the invalidations are set in stone. So we will have an answer on crypto in terms of what the price will tell us fairly soon. Whether or not we're heading into a deeper bear market or we get that bounce back and the 4-year cycle narrative is shattered. But basically, if you're an options trader in crypto, it's not a bad time to look for like a condor or some sort of hedging strategy, because I'm expecting volatility to hit the market sooner than later, and not just volatility, but some volatility that actually has a move that is followed up with. You know how sometimes you'll get volatility and it'll just lead to chopping the range? I mean, like volatility that actually leads to a trend. The dollar's coming into a cheeky spot here. The plan for the dollar is not the same, but a little bit of an update on it. We're getting close to challenging the structure of the dollar. There's a slight breakage here. So basically on the way up on the dollar, we held where we needed to hold. Pretty much the whole way up. And then we had a slight breakage here, which is concerning. So the plan is still technically the same for the dollar, but I am a little bit more concerned now. Losing this was technically a crack in the structure, which is kind of unfortunate because you have so many invalidations on all the majors and exotics dogpiled in the same spot when it comes to betting against the dollar. But the dollar needs to see some life pretty soon since most of this stuff is already done. Otherwise, I guess we could go lower than 96 at this point, which is quite unfortunate because all of that invalidations on the top side would have led to a decent squeeze and we would have gotten above 102. But there was a slight crack in the dollar structure. Still have the same plan, but I am reining it back a bit now because of recent developments in the price action. And remember, you can always look at the euro against the dollar if you want to do technicals on that, but just looking at the Dixie structure, it does look like there's a small crack in it right now, boys. I don't know if that's going to lead to a complete breakdown of structure, but anytime I see a crack in the structure, it's not a good sign. Doesn't mean that it has to dump, but just want to make sure everybody's aware of what I'm seeing there. I mean, oil could break at any moment here and form new lows. Still bearish on oil. You guys know I've been bearish on oil for the past year or so. That hasn't changed at all. The 10-year is still going up, man. This is spooky. Obviously, the Japanese bond market is still going up as well, and it's a bit spooky here, boys. I want to see this 10-year start to come down a bit more, but yeah, it's important to pay attention to the 10-year. You can look at the other T-notes as well, or the other bonds as well, but we might get a pop on the yield here, which is odd, right? And at the same time, we should see the Fed start to inject liquidity, so it's an interesting spot. It's acting a little abnormal here. The Tesla play is still working out. We didn't see a significant dump here, so we go higher. Nothing's really changed on Tesla. Nvidia is a little bit spooky here, boys. This arrow was for this move here. We got the the dump into hitting the top of the arrow, but we didn't hit this spot, which is unfortunate. But yeah, man, Nvidia does look spooky. Okay, the bearish fluidity is still holding. So when we look at the structure on the bearish side, it's still technically holding, and it's not doing that bad of a job right now. And you've got a lot of lows that are kind of exposed. So take my analysis of these stonks with a grain of salt, as always, because it's chart analysis on common stock. But just from what how I normally approach it, it does look a bit spooky. Now it will be fine if we see something like this happen, but we run the risk of even going down here. We run the risk of this happening. So the decision point for Nvidia should be around anywhere from like 160 range is where to pay attention to, like the 160 range if it does dump significantly. And then obviously Nvidia being such a massive market cap in the S&P 500, it could have negative ramifications on all the common stocks because of how the market sentiment is tied together. So getting a little bit spooky here, boys, but the S&P as a whole still looks pretty good. And another good sign is obviously having the smaller market caps outside of the Mag 7 still doing quite well. So, you got McDonald's and Walmart doing well, AT&T, General Electric. So that's a good sign. It shows that, it's not completely fucked, but you don't really want to see the big winner of the market start to show a lot of weakness. I mean, what did you guys see in crypto, right? When Bitcoin, the big winner in crypto, Bitcoin, started to show weakness, what happened to the fucking altcoins? And so you don't really want to see Nvidia, sort of the big winner of the stock market, start to show weakness, because that could lead to the smaller ones following suit. Did you do Bitcoin? Yeah, I talked about Bitcoin. I can talk about Bitcoin in a bit here when if more people come by. But that should be in the VODs later. Okay, so Ethereum. Ethereum's a big one here, boys. We hit the area. This is a big, important spot on Ethereum. It's pretty much the spot, so it needs to hold here. If it doesn't, then the structure starts to crack a bit. This is an important spot for Ethereum, and the nice thing about Ethereum is it actually has been showing a lot more strength than Bitcoin. Today is actually the first day in a while that Ethereum has shown less strength than Bitcoin. But I told you guys, pay attention. When Bitcoin corrects, we want to see how Ethereum behaves. because traditionally Bitcoin corrects, Ethereum corrects harder, and today we're seeing sort of reminiscent of that classical move. Although in the past couple months we've actually seen little spots where Ethereum does better than Bitcoin even on the dump. But this is a really critical spot. So the structure, Ethereum is in a tricky spot right now. It's kind of hard to analyze, but we've pretty much held everywhere we need to hold on the structure. And I know I'm adding a lot of lines, but the most important line now is this one where we're at right here, right now on Ethereum. This is it. We could dip a little bit lower, but what we don't want to see is something like this. If we dip a little bit lower, we have to bounce back into the range, because then we could test the local here as well. But yeah, man, okay. So basically, if we dip below this, right where we're at right now, there's probably going to be some sort of bounce back. Pay attention to what happens here. If this leads to a dump, that's a Kraken structure, which could mean lower than 26. So if we fall, let's say Ethereum falls down to like 3,000, right? Right now it's at about 3,073, but let's say it gets to 3,000, we'll likely see a bounce back up to where we are right now. So we dip to 3,000, we come back to where we are right now, which is again around 3,075. If that fails, it's a Kraken structure. If it doesn't, then it can rebound and rebuild the structure. But if it cracks there, that's where it kind of gets fucked. Topside fluidity was rather good too. Wasn't too bad. So we saw the bears sort of step in where they needed to and show a lot of strength, which was here. That's not a good sign either. The good signs though are the fact that every time we've made a new high, it's been more significant for the most part. So that's a really good sign. But other than that, Ethereum is being put to the test right now, and it's quite unfortunate that it's happening right now because obviously the S&P is down today and Bitcoin's down today. So it's going to be a lot harder when both those two things are down. It's going to be a lot harder for Ethereum to be able to make a comeback on its own. That's a juicy 4-hour fair value gap. Your arrow is a perfect spot to go short. Oh, here. Well, yeah, because this is the breakdown of the structure. I don't know about fair value gaps or anything like that, but this is where the structure cracks if it goes lower. And then this is where the question of will we be able to rebuild it, or is the crack more severe? And this is the decision point pretty much. But there's other good news for Ethereum. ETH Bitcoin is still fine. It's still following the structure nicely. That's a good sign, but of course ETH against Bitcoin doesn't tell the whole story because, you know, ETH could be doing good against Bitcoin, but if Bitcoin's doing bad against the dollar, then of course ETH is still going to likely do bad against the dollar as well. But the ETH Bitcoin chart still looks good to me, man. It's like I said, it's quite unfortunate because if Bitcoin wasn't dumping significantly, and maybe the Bitcoin's dumping more significantly because of the S&P, then Ethereum would be smooth sailing right now. But that's not the case, obviously. The good news is if Bitcoin does make a comeback, Ethereum will make a comeback in a much bigger way. And which is pretty standard issue, right? With altcoins, if Bitcoin's up a couple percent, alts are going to be up, 5-6%. If Bitcoin's down a couple percent, same thing. But even more so for Ethereum right now because of all the context in terms of how ETH is trading against Bitcoin. You guys can't really see all the context on the 1 minute here for Bitcoin, so I just want to make sure it's in screen. Zcash. Everyone loves to talk about Zcash these days, huh? It's trying, man. I'm not fully convinced on it just yet, but it's certainly trying. I mean, it's still holding above the previous lows, which is very important to do. It's done some cheeky stuff as well, but I want to see if we can get a bit more reversion back to the mean. So we had sort of this very defined range on Zcash, right? The lows and the highs. And then we're starting to move away from that and looking for a reversion back to the mean. So, if it can... The first spot, of course, because it's the bearish fluid spot, would be, it's kind of hard to see, but it's right there at 530. That's an important spot. If we can get to 530, and yeah, the plan for Zcash is like that. it's just monthly looks bad. That pump was like a retracement on monthly to go lower until proven otherwise. You talking about Bitcoin, White Wolf? If you want to see what Bitcoin, here, I'll show you what Bitcoin looks like on the monthly right now. Oh, on ETH. That's a pretty spooky chart, right? So look, all I'm saying is, and I've been saying this the last couple months, you guys know I like to see Bitcoin go up. I like Bitcoin, but it's not a bad idea to hedge. I've been talking about hedging now for a while. I mean, if you can stomach the drawdown of not hedging, that's fine. But hopefully it bounces back up, right? It just doesn't. There's not a lot of things that are pointing towards that being a high probability right now, unfortunately. If things start to change and the market proves otherwise, then I can change my opinion. But looking at all the data and measuring everything, we kind of need some divine intervention here on Bitcoin, which I've seen happen before. But yeah, from a mechanical approach, it just, oh man, it's looking pretty spooky, man. I'll be honest with you. And so, like I said, hopefully I can change my mind on that, given new data that comes in. But I don't think it's necessarily a bad idea to look to hedge your bets here. But can we just gap up? I mean, here's the thing too, right? If we do see a rally, I'm still going to be skeptical of it. And I don't want to be. But even if we see a rally, we're not smooth sailing on Bitcoin until we get through the last supply zone, which the last big supply zone that's left is at 109 to 112. This is it right here. So even if we get a rally going, I'm going to be rooting for it if it's good enough. But we still have to get through this before I can say, oh, Bitcoin's bullish, or 100% bullish again. Time to go to the moon. We're going to the moon. So yeah, it's unfortunate because I want Bitcoin to do good. And you guys know that I've been pretty much gung-ho bullish on Bitcoin since down here. And I started to get a little spooked here, right? I'm getting a little bit more spooked. Bitcoin stopped following stonks in the ES. Okay, so here's this big thing, right? So it's no surprise that the S&P has done better than S&P and gold have done better than Bitcoin this year. But the thing about Bitcoin and crypto in general is the volatility is just so much higher. Like and I don't like to cherry pick metrics, but you can pick almost any metric that's reasonable and look at Bitcoin's ROI compared to the stock market's ROI. I mean, we can go back to inception if you want, but I think even that is pretty cherry picked. Bitcoin over the long run has produced way better percentage gains than the S&P 500. But anything that goes up really fast is going to have a lot of downward move as well. You can't just have the Bitcoin chart just do this forever. That's not realistic. And in fact, that just means that the fall is going to be even bigger. Right? But you're right. I mean, yeah, there's been a slight decoupling of the S&P and Bitcoin, and not in a good way, because the decoupling has happened with Bitcoin dumping and the S&P. Now, intraday stuff, they don't really decouple that much. They're pretty solid at following each other. The difference is, if the S&P dumps on the day, Bitcoin's going to dump a lot more. If the S&P pumps on the day, Bitcoin's going to pump a lot less. So they still sort of follow each other with market sentiment, but the overall supply and demands have been different. Yeah, Palantir looks a bit weak here too, guys. I'm not gonna lie to you. Nvidia and Palantir are two charts that spook me. Actually, what's funny is Tesla actually looks pretty good. And I think the classical investor out there would rather dogpile into Nvidia and Palantir than they would Tesla. This is not a personal thing, guys. I really don't give a fuck about who the founders are, what they say, what they don't say. I don't care about that. I'm just talking about purely from the chart. Good morning, bye, crypto. You guys know when it comes to this kind of stuff, it's never personal. It's just what I see on the chart. I'm not trying to talk shit about any particular company. I'm just saying if it looks weak, I'm going to say it looks weak. If it looks strong, I'm going to say it looks strong. Same thing with crypto too. Although I am a little bit biased towards Bitcoin. I am a little bit more generous towards Bitcoin when it comes to my analysis. I usually, and it's a slight problem, but I usually try and push it along a little bit. But at times like these, it's really hard to do that because, you know, the chart is the fucking chart, right? This is the Bitcoin chart. What do you think? Okay. Now let's say that you're really bullish on Bitcoin. What do you think when I do this? Where do you think it's going to go? And remember, when you're looking at a chart, there's all this talk about quants and bots and trying to use mathematical models on the market, which have some validity to them, at least for a fixed period of time. But really, when you look at a chart, all you're looking at is a crowd's emotions. What are the emotions in the crowd? Which is very hard to predict. One of the hardest things to predict is what do humans do in mass. But that's what you're looking at. And to make it simple, just look at what point do you think somebody is going to make a decision? Somebody is going to make action on their play. That's all there is to it. And the other thing you want to pay attention to is, okay, higher highs, higher lows, lower highs, lower lows. Fine. Those are good, sure, to some extent. But at the same time, you want to look at how significant are the higher highs? How significant are the lower lows? So yes, has Bitcoin been in what would be considered an uptrend from the classical approach in charting since late November? It has been, right? Because we're making higher lows, higher highs. But why are they not more significant? Why can we not get higher? Let's look at the past on Bitcoin, right? Would you consider this a significant higher high than down here? That's pretty fucking significant, right? And what it did is eventually led to another higher high. So that's all I'm trying to say is the reason there's two things you want to pay attention to. What is the crowd thinking? And then also, what does the supply and demand look like? And there's a couple ways you can look at supply and demand. You got to wait for either the extremities. So either when we get a big move in the market, then we get a clear picture of the supply and demand. But let's say that we haven't gotten a big move in a while. How do we do it then? And that's the trickiest, most difficult thing to do, is to be able to gauge what the true supply and demand is on this 4-hour chart here, even when we haven't seen a big move. And there's certain ways you can do this to sort of look at it. It really depends on a couple things, but the main thing I do is I look at where the structure breaks. So it's been more tricky this time around, and it usually is. Like if we were in the summertime, I would know with a really high probability what's going to happen in terms of where the structure breaks. Like I can see it really well in the summertime because of how the prices flow. It gets harder in Q4 and it gets a bit more tricky, but like let's look at Ethereum, for example, because I think this is important. So how do we tell where the Ethereum structure is going to break, right? And so we want to look at everything that happened here. Then we get the bounce, and then everything that happens here. So everything that happened here, and everything that happened here, at the lows. Okay, so let's start marking out the lows. It gets harder. This is a harder. I can show you it in retrospect if you want, but I'm sure most people are here to not see it in retrospect. I can show you like a really simple example of this. But let's look at it. Let's start marking out the lows. And the reason why this is trickier is because they're less defined. The retests haven't been as solid, and there's a lot more of the lows. So it got kind of messy, basically, but I'll try and make it simple. So I'm marking out all the lows over here, right? Why? Because this is where conviction of liquidity was. This is where a bunch of people did the same thing at the same time. Okay? So we lose a low, a lot of people sell at the same time, right? We gain a high, a lot of people buy at the same time. That's just, you know, people buy tops and sell bottoms. It's been happening in the market since the fucking dawn. And then we want to see how the market behaves, right? So first example here is it held, right? We find the bottom, we bounce back into the range. First one finally held. Then we look for the next one. Okay, it held. Then we look at the next one. This one got kind of sloppy. That's already a warning sign. Then we look at the next one. It held. And then what happened? We weren't able to get to the next one, and we retested this one. So this is where structure broke right here. Right in this zone is where structure broke. Okay? So every way we're holding it, we're holding it, we're holding it, we're holding it. We can't get higher. We come back and retest it and break below it, and then we get the retest higher after that, and then it breaks. Okay, so now let's look at what's happening right now. So I'll clear that chart. This, again, this is a bit trickier, but so this worked out fine, right? We held it. We held it. New high. Okay, let's look at it again. We held it, and now where are we right now? So bounce here or break this. We could see a bounce here, but the retest here would probably lead to all of it shattering because we already had a crack here. This one worked out fine, but I mean, there's a world where we catch it here, just like on Bitcoin. But that would be against probabilities. And if the chart moves against probabilities, then we can do that. But the probability is that it cracks and breaks. There's a really good example of this happening on Bitcoin where it was much more obvious. So let me show it to you on Bitcoin. This was, to be fair, I was rooting for Bitcoin a lot, and maybe I was being a little bit overzealous, but I did mention that the structure had cracked on Bitcoin. So let's look at it on Bitcoin here, right? This was back when we were above 100K, and after that big crash that came in. Big crash is relative, but. So same thing, we hold it, we hold it, we hold it, and then it cracks. So here we go. Here's the low. Here's the holding of it, which by the way, this was kind of messy, but it's still fine. This is the low, which can kind of marry these together because they're right next to each other. We hold it, right? And then we go for it again. We hold it. So why couldn't we pump here? Instead, structure starts to crack, we get the retest, and then the rest is pretty bad. Now, when this structure cracks here, really all you're looking for is lows lower than this low. So down here, we could have seen a revival of Bitcoin, technically. But the same thing happened again, just on the inverse. It was the bear structure that didn't crack. So in this scenario, even though we didn't get a new high and we didn't get a new low when we were sitting right here, I could still see the cracking of structure and the imbalance of supply and demand inside the range. Basically, if you build a strong structure, why is it cracking? If it's supposed to be a strong structure, why is it cracking? grabbing liquidity. This is less about grabbing liquidity because this is inside the range. This is less about going for derivatives and stuff. This is about showing what the supply and demand is on the spot market, which the spot market supply and demand is going to have bigger ramifications on the trend and the long-term movements that have conviction. Whereas grabbing liquidity or looking for like where derivatives get squeezed and stuff is also a good approach as well. But the way that you do that, if you want to like start scalping it, is you would understand where the general trend is on the high time frame, and then you can go to the lower time frame and look for little grabs of liquidity. So push to fills, you know, like, you know, if you want to get a bunch of shorts filled, you push the price a bit higher to take out a bunch of other people's shorts. That way you have liquidity to get your own shorts filled. And that happens on the lower time frames and stuff. But at least you know, if the structure starts to show cracks here, maybe a little bit aggressive for looking for long liquidity grabs versus short liquidity grabs. You could be a little bit more aggressive. Okay, so what are we doing on Bitcoin right now, right here and now? And again, it's trickier right now because it's Q4, but we held it. And where are we? So this held. Okay, next one held. Why are we getting close to revisiting it, man? After these things hold, you just want to fucking pop it. And we did pop it, but why was it insignificant, right? So we popped the top. It might be hard to see. This was a higher high, but why was it so insignificant? That's a red flag. Now, there is some silver lining, which is, and this was kind of due to FOMC, but it's still silver lining, which is both these highs are equal, which means short sellers should still be in the same spot from here. And there's a lot of short sellers in the same spot here. So that there is like liquidity up there on the derivative market. The question of, is it advantageous to grab liquidity on the derivative market when the spot market is supply heavy? It could not be worth the risk sometimes. And that's where we keep seeing this theme of equal highs and sometimes equal lows. So now, where do we need to hold? The next one, which is right there. And we already did hold it, but we're getting close to being back to it. Okay, so let's look at it on the other side now. So there's the first hold for the bears. Let me flip this around. It might be easier for you to see on the other side if it's flipped around. There's the first hold for the bears. Next one is here. Got a little bit sloppy, so shout out to the bulls. They're doing a good job there. And so now, if we return here, it could lead to this. If we break here, it could lead to this. That's why we're in a critical spot. Let me flip it back around now. So breaking this or breaking this could lead to big arrow outside the range in either one of the moves. Which is why I see a massive move on the horizon, because we're squeezing. And both sides are getting squeezed, and invalidations are tightening. Stop losses are getting tighter across the board. Invalidations are getting tighter across the board. Emotions are rising. And as emotions rise, eventually it'll be released in a bigger move. But you know, this is a pretty clear example of how you can see so much on just the candlestick charts, right? Sure, the candlestick charts might be interpreted as simple by the layman or the newbie who wants to go to indicators or whatever, but look how much I was able to derive just from the candlestick chart and understand the structure. Now, it might have been harder to follow that one because, like I said, it's more trickier than ever right now. So don't feel bad if it was hard to follow, but that's how I reach these conclusions. Is I want to see if I can't, if I don't, if the chart hasn't given me a clear imbalance of supply and demand via squeeze on the derivative market. So if the derivative market hasn't been properly squeezed, and so I can't see what the true spot supply and demand is, you know, how do I know where it's going to go next? I have to get a bit, you know, fancy with it, and it comes down to the mechanics of it. Where are the pressure points? At what point does one side get scared in a massive way at the same time? So what we could see if this does start to break, right? This is the first decision point. If we go low, first decision point, second decision point is the retest of it here. So either down here, or survival, and we get an abnormality. And then same thing up here, right? This technically would be or higher. I don't know, if you're new to the stream or you've only been around for a little bit, you might have to rewatch that part back, but I'm sure some of the OGs, hopefully it clicked for them. Give me 1 second. So that's when I mention I see like structure cracking or something. That's what I'm referring to. I haven't really gone into detail and explained it like I have right there too many times in the past. But that's what I'm looking for, is like, where is that structure going to crack? So the same thing would be true here technically as well, but there's more context as to why it wouldn't be the case, and that's because of all the derivative liquidity on the top side of the market. Once we get back up there, the probability of us going through it is a lot higher because shorts will start to close at the same time. And if shorts start to close at the same time, that's going to operate as a flood of market buys that come in. If you want to see a massive flood today, the quickest way it's going to happen is at the bottom side. So it'd actually be flushing out the lows, but that would crack the structure, right? So this is why when I talk about the dollar starting to show little signs of crackage, it's because of this. So this is a chart of the dollar, right? We held it. We held it. We held the next one. We cracked it a bit here. So we either get this or this. And of course, chart can only go up or down, but I'm not talking about like this shit forever. And the probabilities are slightly leaning a little bit in the favor of the euro right now. A little bit more in favor of the euro. Now, when is this methodology the most effective? When we don't have high time frame level confluence. So when there's nothing over here that really backs up higher time frame movement. Because where we're sitting at relative to what happened here earlier in the year, there's not really much where we're at currently. There's more, like, basically, are we here or are we here? No, we're kind of smack dab in the middle of it. Now there's this as well, but that's where we're at right fucking now, so. There's also this, but it's kind of the same thing, right? Splackabelly says he's taking a long at 89,610. Best of luck, man. pin bar on ETH. See Oracle? Oracle had a big dump lately, right? I don't know, I don't trade Oracle. Alright, let's see how bad the dump was on Oracle. I haven't even looked at it. Ooh. Ooh. Yeah, that's a hands-off situation, boss. I'm not trading this thing. Not that I would normally, but yikes. Oracle's pretty old school too, so when you get this kind of volatility that comes in, what you could do is you could wake up the passive heads. Once you wake up the passive heads, the float is exposed as being way too overvalued on the price to earnings. So if you want to know why price to earning ratios are so out of whack, particularly for tech companies that are leaning into AI, it's because people buy and fucking hold, man. They don't sell. And what could drive somebody to sell that would not normally sell? Volatility. And it's pretty hard to argue. That's some nasty volatility. So now people who have been holding Oracle for a long time are wondering, uh-oh, is it time to sell? I mean, look, Oracle goes on the New York Stock Exchange in 1986. I doubt we're going to wake up anybody who's passive from over here. What about people from the last 5 years? In the last 5 years, Oracle is up, let's see, December 2020. Oracle's still up 200%, but at the highs, it was up 500%. And as far as like looking at it from a mechanistic point of view, I don't really see much here to be able to give an opinion on. I mean, I can try. It's good holding a structure. That's actually kind of clean there. Yeah, held it again. That's clean. But I mean, it's just the volatility's been so high. There's not much structure here. It's just a fucking madhouse. It's a frenzy. These kind of charts are so random. Like where they go next is so fucking random. And this is why old school, like really old school institutional investors and investors in general reject the idea of the chart having any influence on where the price is going to go next. It's because of charts like these. Like this chart, admittedly, I don't know where it's going to go next. I really don't. And if I don't, I'm just going to tell you I don't, because it's random right now. Like this is fairly fucking random. Now, what could have significant influences on this chart is the market sentiment coming from the index. If the S&P sees a brutal week next week, this thing's going to dump too, man. It's poised to dump. I mean, what happens when the S&P has a brutal week? Alpha risk looks less appealing, and technology stocks dump. And it's not necessarily that technology stocks are dumping, by the way. It's more so that there isn't as much demand, which obviously would lead to a dump. But the float on a lot of these things, and even Bitcoin, if I'm being 100% honest, the float is being maintained by the overwhelming FOMO. Once you lose the FOMO, the natural supply takes over. I mean, with Bitcoin, you don't really have price to earnings ratios, right? You can't really, it's not you can't fundamentally approach it. And honestly, you can even say that with gold. So the chart becomes a lot better. But yeah, man, Oracle dumped pretty, let's see how big of a drawdown this is from the highs. Yikes, 44% down from the highs. That's brutal. Amazon looks a little bit spooky here, but it's not too bad. Yeah. Not a bad spot to look to hedge Amazon a bit, but Google, there's not really any red flags so far. Not saying that there can't be, but it looks fine. Nvidia, kind of red flags. Like I said earlier, Nvidia could pump, right? I mean, these things love to go up and to the right, but you know, as far as like all the Mag 7 right now, it's not just that Nvidia's down the most today, but it's also, you know, where it's rejected from. And you know, we'll see what happens, but yeah, I wouldn't be rushing into to buy Nvidia where it's Tesla looks good right now, man. Tesla actually looks really good. This is the final spot. I mean, there's technically this area too, but it's not that big of a concern because then all the options traders that are betting that Tesla's going to go down are going to be dogpiled in the same spot. Now, similar to Oracle and any individual common stock within the index, if the index dumps significantly, then they're not immune to that market sentiment. Nothing is immune to the market sentiment. Nothing. Not even gold or silver. Remember, guys, fear spreads like a wildfire. It doesn't matter what safe haven you try to look for. Some of them will do better in a wildfire, right? Some like gold will do better in terms of sustaining the downward move, but it's still going to have a downward move. As far as Bitcoin is concerned, Bitcoin's been doing great over the last, pretty much since origin. Came late, will this live be available, uploaded? It should be posted on YouTube a couple hours after I stream. And for the traders in the chat, and even active investors in the chat, like 10-20 minutes ago I went through how to read structure when we don't have imbalances of supply and demand. Which, by the way, is the hardest thing you could do, in my opinion. Because it's really easy when, it's really easy when you have a chart that looks like this, right? We're just sort of consolidating, and then you get like a breakdown. And so you'd assume a breakdown would lead to that, and if sometimes it does lead to that, but if it doesn't, and you get the bounce back, it usually means we're going for the highs, right? But how do you tell if it's gonna go this way or this way when we're sitting right here? You look at, anytime we go to the top, there's a battle that happens. Anytime we go to the bottom, there's a battle that happens. Who wins the battle? How decisively do they win the battle? Is it supply and demand, bulls, bears, accumulation, distribution? In trading, there's so many different ways to say the same fucking shit, dude. Buy orders, sell orders, bids, ask, limit orders on the buy side, limit orders on the sell side, offers, quotes. I mean, come on, man. It's all the same shit. It's just different terminology. At the end of the day, it's buy or sell. That's it. You can try and make it as fancy as you want as a barrier to entry, but that's all the market is buying and selling. It's a simple game that gets overcomplicated. And within this buying and selling, we want to visualize what is the true supply and demand. Because the true supply and demand will tell us where the trend will go. And sometimes it's not realized for, in undefined amount of time, meaning you can't time the market. And that's okay. We don't need to be able to time the market to make money from the market. It's just, let's say that you're really itching to grow your account or your portfolio quickly, which everybody gets that feeling, by the way, regardless of how much money you have. Then look at more than one financial instrument, but understand when you hop from financial instrument from one to the other, you understand the slight different dynamics that are at play, right? Like in crypto, and this is more so specifically talking about the bigger market caps, obviously Bitcoin, Ethereum, even Solana, XRP. There's a lot of leverage in the system. We all know that, right? There's more leverage in the crypto system than there ever has been by a wide margin. Obviously, as time goes on, you're going to have more and more leverage enter the system, but by a wide margin. Like, way, way more leverage. Not just a steady incline of more leverage entering, no, like a fuck ton more leverage. This is not a bad thing. I mean, it's bad because it could hurt the overall price, but as a trader, this is a great thing because With more leverage becomes more predictability. The charts become, they follow probability a lot higher when, and the reason why is because what comes attached with leverage? Can somebody be a passive market participant when they're on leverage? Maybe if they're using 2x leverage on Bitcoin, sure, maybe. Which actually isn't really the case, because look at the drawdown so far, and if it goes a bit more, you know, like let's say they 2x leverage from the highs, you know, 14 more, actually less than, let's say 10% more, and they can still get fucked. They can still get liquidated. But what leverage does is it forces action on the market at specific times. It's more risk, yeah, it's more risk, but the advantage of having more leverage in the markets is at some point people are going to have to take action whether they want to or they don't want to. And when they don't want to, and they all don't want to at the same time, then you might have opportunity. Leverage is a great tool, right? Particularly if you're on a smaller account. Even on a bigger account, you could still use leverage because you want to be able to hedge and even sometimes take longs, but you want to be able to, you know, manage your risk by hedging, even on big accounts. But it's I haven't used this quote in a while. I wonder if it's still a command. I don't know, Champ, are you still here? But leverage is like a campfire. Okay, imagine you're going camping and you have a campfire, right? A campfire can keep you warm at night, it can heat up your food, but if it's mismanaged, it can burn down everything. Burn down the whole campsite. So yeah, leverage is a beautiful tool, but it can also destroy everything. It just matters how you manage it. You know, did you let the fire get out of control? And when other campsites are all burning down at the same time, you know, there's more territory for the ones that didn't get burned down. Here's the other thing too, right? There's a lot out there in the crypto space where people just want to become, they want to 100x their account overnight or whatever. You can try and do that, but I mean, more often than not, almost everybody here in the chat has learned the hard way that maybe in a blue moon, 1 out of every 1,000 people are going to be able to do that. But the reality is, you know, it's not going to happen. 100xing your account overnight or something crazy like that. It could happen, but it's the probabilities are so stacked against you, right? They're so stacked against you. And what is the reality of a trade? Well, because a trade is probability and there's variance, every trade has an element of luck to it as well. It's a balance between luck and skill. If a trade works out for you, by the way, don't let it get to your head ego-wise and being like, oh, it's all skill. I'm the best at the market. I knew it was going to happen, and then it did happen. I'm super skillful, and of course that was going to happen because I knew it was going to happen. I mean, you can have good probability, you can have good setups, but don't confuse it with this idea that there's no guarantee it was going to work out, even if you did everything right. There is an element of luck. Now, you can minimize the variance and the luck by your level of skill, but that will always be a constant. You can't, there's no perfect trader out there. You cannot get to a point where every single trade you take is guaranteed to work out. Every single active investment you take, investing in this random common stock for XYZ reason, it's no guarantee it's going to work. Because you're not dealing with a perfect world. You're dealing with a crowd that's in a frenzy. The chart is just a big crowd in a frenzy. Everybody hops on to make money, right? And there's a lot of emotion in the chart. The chart is just one big crowd emotion. paired with the fact of supply and demand. God, that's a nasty hourly though, huh? The one that came in earlier this morning? Jesus. Yeah, we don't really have much icebergs in general. It's loading up a big move. People are very unsure about where it's going to go next. Everybody's searching for answers of where this thing goes next right now, because we're in that spot in the chart where we haven't seen anything major happen in a while. So what the fuck is going to happen next? You're watching a scary movie and there hasn't been any jump scares in a long time and you can feel it coming, right? Play the Pump It Up song. We needed action to the other side. To either side. Yeah, I mean, the only play right now is technically a long, but it's not that good of a long. Especially if you're on a bigger account, like I said at the beginning of the stream, because if you want to be able to exit your position with minimal slippage, this is a sort of a dangerous spot. Can we just keep crabbing? You want to crab market? You want to just do this on Bitcoin for the rest of December? All right, let's see where you guys are at. Do you think Bitcoin is more likely to do this or this? Put a 1 in the chat if you think it's going to do this. Put a 2 in the chat if you think it's going to do that. Okay, slightly more 1s. And if you're not sure, you can just put a 69. No 6-7s though. 69s. 1 because ETH is at a good level. Yeah, ETH is at a really important level. In fact, ETH might actually help Bitcoin out a bit here, as crazy as that is. See how the chat is like 50-50 right now? Let's see, we got 1, 2, 3, 4, 5 2s. 1, 2, 3, 4, 5. Yeah, 5 and 5. That's why I said at the beginning, if you're an options trader, taking some sort of condor here is not a bad play. Because not only can you expect volatility on the horizon, which you, by the way, you want to give yourself a wide expiry because that's just normal to do in options. Don't fucking do the 0 day, whatever. It's not only expecting volatility, but it's also expecting a trend, so like a runner on the position. Meaning, the next move should not only be a big one, but it'll also be a move that should be sustained. Which makes it really interesting, right? Because we're sort of reaching a moment in time where the overall big trend is at stake, or yeah, I mean it's the overall big trend. And what do I think? I think we'll have our answer here and here, or we'll have our answer here. So we're technically closer to this, and we've been making insignificant higher highs, so it does look quite grim. I guess I'd lean more into the bear camp here, but I mean, it's impossible to know, right? And there's a lot of things that are spooky on this chart, but I've been wrong before, and just because the chart looks spooky doesn't mean it has to dump. It's not that you want the crab market, but it might be a possible scenario. Yeah, I mean, invalidations are going to keep tightening. And the longer that we tighten these invalidations, the longer that we stay in this little confined range, the bigger the move that comes afterwards. $420. Look, we're at a point now where the Bitcoin chart is pretty fragile, right? Which means that we have to lean on the S&P 500 for market sentiment. So really, Bitcoin is at the mercy of the US stock market right now. Because liquidity providers, particularly Wintermute, are not going to be as nice to the bid side of the market if the S&P is going down. All right, let's have a look at, and by the way, you guys see how we haven't, let me show you the Bitcoin chart real quick before I show you this. You guys see how, realistically, we've just been bouncing between this range. I mean, even today, we're still just bouncing between the range, right? So nothing crazy has happened on the chart. And even though nothing crazy has happened on the chart, 117,000 traders were liquidated today. Does that not show you how much leverage is in the fucking system? 117,000 traders were liquidated. By the way, it's probably a higher number because of how they report the liquidations. And we barely moved. So, I mean, what does that tell you, right? How much fucking leverage is in the system? So, I mean, that number's going to be small once we see a big move. It's going to be a lot bigger, right? This is the moment. Yeah, and these kind of markets, by the way, I'll delete this now, but these kind of markets is where, like, moving averages get absolutely crushed. You're 100% right about that, Youth. Because by the time the moving average tells you to buy, the price is going to be up here. By the time it tells you to sell, the price is going to be up here. Buy, the price is going to be up here. Sell, the price is going to be down here. So low time frame moving average strategies are going to get slaughtered. You guys said there was somebody had like a 500 million position on ETH, right? On how do I look at that again? On Hyperliquid. I normally don't look at this, but I'm kind of curious now. How do you? Is it over here? Hyperliquid whale tracker. Oh yeah, here we go. We got an ETH long. 540 million. It's down 3%, so it's down 17 million right now. Liquidation price is at 1900 though. Oh, this is a fat amount of margin because it's only a 5x leverage. This is a chunky position. Yeah, the true margin of this is what? Over 100 million, right? 108 million? That makes sense. So the margin on this position is 108 million. Total position size 540 million. Jesus Christ. Oh yeah, it says the margin right here. Okay. And because it's long, they're gonna be fucking they're gonna be paying funding for crazy amount of funding for a while. But the funding doesn't matter that much. It's just the unrealized P&L is the most important. And actually, technically, the end all most important thing is actually the realized P&L, but what tool is this? This is CoinGlass. And it's the Hyperliquid whale tracker. But this is just Hyperliquid, right? Hyperliquid is a fraction of the size of the centralized exchanges. So imagine how many other big dogs are out there with, billion-dollar positions open right now, all at the same time. So billion-dollar positions, there's probably more than 5 of them. Who knows how many, because Binance doesn't want to tell us. Bybit doesn't tell us, OKX, the whole lot of them. Yeah, I mean, this is where everybody takes a bet at the same spot, and then one side is going to win and / lose, and then we're going to get big moves. Well, I don't know about billion-dollar positions. I'm speculating. I really don't know what their agreements are in terms of their risk limits and stuff that happens behind closed doors, and what they negotiate on risk limits once you get to that size. But yeah, I mean, if you're risking over 100 million on any one position with leverage, you're likely, this guy's not using risk management. This guy's likely all in. I mean, who knows? Maybe he's worth 10 billion or something, and this is using good risk management, but probably not. Centralized exchanges lie about their volume. That is true. That is true. Why wouldn't you just buy spot instead if you just wanted to put a billion? Yeah, that's a good point. That's a good point. But I told you guys, you might think that people who have billions don't use leverage, but here's an example of somebody who does, who is using leverage. Which is probably hard for you guys to see it because it's so zoomed out. This is a pretty interesting tool too, which is like the derivative risk index. It's showing neutral volatility to high risk. It doesn't mean that low risk means good time to long, but a lot of the time in history that's been the case. And there's other cool stuff you can look at here, right? This kind of stuff is not. It doesn't replace the chart. The chart is the truth. Everything outside the chart, yeah, maybe. Funding is negative. Yeah, I mean sometimes funding will be negative. That's true. But what is funding most of the time, right? It's negative on Hyperliquid, but you can see on here that you can see what he's paid in funding. Where was I again? Here. And then here. He's paid 500K in funding so far in this position. This guy's paid 1.3 million just on funding. I'm not talking about unrealized P&L or anything, just on funding. And will this ETH guy get liquidated? Probably not. 1900's far away. But hey, man, it's possible. So he loses 100 million if the Ethereum price gets here. So if this goes to here, he's out 108 million dollars. He will keep adding more. Well, we'll see. I don't know yet. If he doesn't add to his position. The other thing is, what if he starts to trim his position? What was I going to show you guys? So there is some silver lining, right? I believe it's under data. There is some silver lining, which is, you know, how much Bitcoin is still on the exchanges. It continues to go down. Dominance, obviously, it's pretty straightforward, right? Bitcoin dominance has been on a tear. But we're starting to see some cracks on the Bitcoin dominance, which people have said a million times before, right? Oh, Bitcoin dominance is going down. Bitcoin dominance is going down, whatever. But yeah, starting to see a little bit of it. And mainly when I look at dominance, I don't really care too much about that chart. The best way you can look at dominance is you put this chart, Bitcoin against dollar, against Ethereum against dollar, and you look at them side by side. That's the best way to gauge dominance. Because you can actually use, the mechanical approach of looking at the supply and demand on the dollar charts. Funding costs will eat away his capital before ETH hits. Yeah, I mean, funding is a pain in the ass, but it's not as bad as unrealized P&L. That's why, like, I'm kind of careful nowadays when I say farming funding, because some people might be like, oh, I got to hold on to this short forever because I'm going to be able to farm funding on it forever and stuff. But funding is like just the cherry on top, right? It's the cherry on top of the sundae. It's not the fucking sundae. What kind of slippage do you get? That's a good question, and that's why people say stop losses are bad because of slippage. But there's ways to mitigate the slippage. So how do you do that, right? Well, you have to slowly deleverage. You have to slowly close your position at portions at a time. You can't just fucking hit the fat finger and close that kind of position with the depth of liquidity in the books. And most of the depth of liquidity in the books is really only at the front end because it's provided by the arbitrage market making. So liquidity is deep, but it's mainly deep on the front end most of the time, and that's because the arbitrage market making bots are taking advantage of the spread. And if you wanted to close $500 million worth of ETH longs right now, you're going to eat massive fucking slippage. In fact, we'll probably see the wick on the chart if you just closed it. Now, the arbitrage bots will come in and step in and buy that up, but it doesn't mean you're not going to eat the slippage. So, like, here's an example, right? If you're on a bigger account and you want to mitigate your slippage, which, by the way, a lot of people will just go to OTC for that, but OTC is a fucking ripoff if you're actually decent with a chart. You stagger your stop losses, right? So you start to stagger it down, like you would like your entries and your take profit targets. You stagger your stop loss now, or you start to manually close it. It's really up to the individual, but he's probably got another 500 million worth of liquid waiting. Yeah, I mean, maybe. Usually, I mean, guys, most people don't just have 500 million liquid laying around. Even the richest people in the world don't just have 500 million liquid waiting in a bank account. And if they don't have it in a bank account and they're still gung-ho crypto, then we get what's called that downward spiral that I was talking about, which is, let's say that he has 500 million in spot Ethereum that he's ready to add on. So he'll sell his spot positions to be able to add on to his leverage position. Well, selling your spot position is going to do what to the supply and demand? If you're selling spot to add on to margin, then you're affecting the supply and demand of the spot market, which is the true market of determining where the price goes next. If everybody's selling spot to add on to margin, it's a downward spiral. This is why Solana, I said this earlier, but this is why Solana is getting its fucking ass kicked. Because all the meme coin guys come onto perpetuals, right? They come onto perpetuals, they get a long position. Why sell if it's a cross position? You don't need to sell spot. Coin M position, yeah, with coin margin instead of USDT margin, which is a thing as well, but the most popular is USDT margin, right? But yeah, so as I was saying, meme coin guys hop onto perpetual contracts and they have a long position, right? And they don't want to lose their long position. So they're going to keep selling off their Solana so they can add on to their long position. So the Solana chart has just been getting slaughtered because as all the crypto prices go down, more importantly, Bitcoin and Ethereum, they're just going to keep selling Solana to try and keep these longs alive. Do you guys understand that concept? I don't know if I'm explaining that well enough. So let's say that Joe opens up a long here, and his liquidation is here. As price starts to go closer to his liquidation, he's going to sell some coins to try and pull that liquidation lower. The price goes lower, he sells more coins to try and pull that liquidation lower. He sells more coins to try and add margin to the position, so to pull it lower and lower. And it's a downward spiral because as Joe is selling his coins, he's adding supply to the market, which is going to pull down the price anyways. So Joe is hoping that others are not doing the same thing that he is doing, because then if everybody's doing the same thing, trying to pull all their liquidation prices lower, at the same time they're also selling their coins to do so. Once everybody's doing that at the same time, then it's just a downward spiral until we hit the bottom. Well, where's the bottom? When the leverage is flushed out of the system. And is the leverage flushed out of the system? I just showed you guys 117,000 traders got liquidated on a move that was 2%. I don't know if that means the leverage is out of the system, particularly when you have all the meme coin guys jumping in here. So that guy having 500 million in liquid cash is probably unlikely, even if he's a billionaire. It's very unlikely. So what is he going to have to do? He's probably going to have to sell Bitcoin and Ethereum, which is going to pull the price down so he can get his liquidation lower. And until he's knocked out of the system, until most that sediment is knocked out of the system, then the price doesn't find the bottom. Until the massive liquidations come in, and they're all flushed out, it's usually going to go lower. Now, it doesn't have to. I mean, what if we're at the bottom right now? We might be. It's hard to tell, right? It's impossible to know for sure. But I think that's one of the main reasons why Solana has just been absolutely slaughtered compared to these other coins, is because who owns a lot of the Solana? The winners of the meme coin markets own a lot of Solana. So the meme coin markets were a blessing for Solana to rise among the ranks and reach higher and higher market caps and higher highs. But once the market turns sour, it's going to feel the sting the hardest among the major market caps. There's nothing wrong with using leverage either. The difference is you have to know when to take the L and move on to the next trade. Like I said earlier, leverage can be a great tool, but is very dangerous to a person who doesn't respect it. To the stubborn person who doesn't want to lose. If you cannot accept losing, the market will show you that you don't have a choice. Sometimes you can get lucky, and you can get lucky for a long time. But eventually, the beauty of the market is it punishes the stubborn. God, I need to stop being so bearish, dude. Bitcoin's struggling right now. I'm not trying to be bearish. I'm trying to explain the mechanics at play right now. Gold's price action, we saw a bit of an abnormality come in to the bullish side, which means it's probably a lot more bullish than I gave credit for. And you've got stack liquidity topside. Expiries that are not even that far out for futures contracts on gold. Gold short sellers are trapped right now. Gold short sellers are kind of trapped. So they need, they're kind of banking on the fact that the spot market supply is going to bail them out. Gold's trying to break out of a tight local range. Yeah. I mean, for the last, what, 2 hours, it's built this range. Are you scalping it right now, El Cool? Is that why? It's a good hold. It's a good hold. It's a little bit sloppy, but it's good enough. Yeah. It's almost at a decision point right now. You're right about that. Because it held this, which is good. It's holding the next one, or it's fighting for it right now. Yeah, S&P is not going to be open for too much longer, but it is trying to mount a little bit of a comeback on the day. And basically, the way that almost every market is right now, mainly the bigger market caps, actually, I should probably specify the way the bigger market caps are right now of any particular asset class. When we get to these points in the market where everything's been going good for so long, people bet that even more that it's going to continue to go good for so long. The longer it's been going good, the bigger that they dogpile in with more and more leverage, right? Which is fine because it could keep going really good for a while. It's certainly possible. But then it gets harder to maintain the flow. So it's basically like when we get dips on the S&P, it's not necessarily that like everybody has decided to press the red button at the same time. It's just the lack of demand. Like, yes, a dump means that supply overwhelmed demand, but it's not necessarily that there was just a ton of new supply that came out of nowhere. It's just that it's harder to maintain that flow. You need to keep having that overwhelming force of demand pressure into the market. Otherwise, eventually it'll start to feel it. And this is true for any financial instrument. If you don't consistently have new buyers showing up all the time, then that supply will eventually just start to weigh on it. Like, look at any meme coin, right? Does the meme coin die when a bunch of people press the red button at the same time, or does the meme coin die when it runs out of new people to buy it? You could argue it's either one, but I think it's more there's just not new FOMO coming in for it. I mean, you could see like a rug pull or something like that, right? I'm not talking about coins that are like that just came out a month ago. I'm talking about like, more established, which is crazy to say, more established meme coins, like take Pepe or whatever. Those bigger market cap ones, they're bleeding out because they've been sustained by FOMO. Yeah, I mean, you're right. Like a rug pull, everybody selling at the same time, that can be applicable to newer meme coins with smaller market caps and that kind of stuff. Sure, yeah. Every rug pulls and stuff like that definitely exist, but even like Dogecoin, for example, has Dogecoin lost its hype? By the way, Dogecoin is in the green box, but we are retesting it right now, which doesn't look very good. Doesn't look very good. So we'll see. It's didn't even manage to be able to take out the high that created it, which is not a good sign. But is there the same amount of hype? And then another example is fucking GameStop, right? Is the hype still there for GameStop? Some of these things, by the way, they can make comebacks. I'm not saying that once the hype is gone, there's no comeback. They can make comebacks, but it usually takes a long time, and it takes solid. When these battles happen at the bottom, it takes continual, solid, decisive victories for the bulls in a slow fashion, and then it sort of crescendos, but it takes time. It's a big circle and goes around in circles. Yeah. That's a good way to put it. Sort of a psychedelic way to describe it is just it's a big circle and goes around in circles. It always loops, right? For good and for bad, it always loops. Yeah, man, look, I know I'm probably more bearish than you guys are used to me being, and it's not because I want to be, it's just the chart. And the other thing is, even though I'm a little bit more bearish than I normally am, it doesn't mean that I'm going to be right. It also doesn't mean that we have to go very much lower before we go higher. Right? Both those things are true. Market maker, enter, hype traders, retail hype, death spiral, GG's, you've made 3,000% on your entry. And then the process starts over again, right? It loops around again. And like I said before, as far as Bitcoin is concerned, first off, I don't think it's going to zero. I don't think that's really even possible that it goes to zero. And some of the people in the chat be like, why is that not possible? This guy's an idiot. The reason why I think it's not possible is because if you don't think that demand is going to show up when Bitcoin is at $5 a coin, then you don't understand. I'm not saying it'll ever get to $5 a coin, but if it does get to $5 a coin, there is going to be unknown demand coming into the market like a wildfire. As price goes lower, new demand enters the arena that was not assumed to be there before the price went lower. Same thing when it goes higher. New supply enters the arena that wasn't assumed to be there until it went higher. So, do I think it's more likely that Bitcoin gets an all-time high again before instead of going to zero? Absolutely. In fact, I think it's probably 100% likely that Bitcoin will get another all-time high before it hits zero. Now, does that mean I can't be bearish on it? No, I can still be bearish because how long do you want to wait? Once you hit like 2 trillion market cap, it's got enough legacy where it's sealed its fate, where it'll eventually get another all-time high. The question is, will that be in a month? Will that be in a year? Will that be in 10 years? Will that be the rest of your lifetime before you see another all-time high? Well, nobody knows the answer to that for sure. But what I do know is I can read these structures, and if it starts to change, I'll let you know. Two years, maybe, but the narrative right now is the 4-year cycle, right? It's the 4-year cycle. Oh, the shitcoins? Yeah. Shitcoins are kind of inverted. So altcoins in general, you have 4 years of downward and you have 1 year of upward, which it's not really a whole year of upward. It's a little bit less than a year, but it's inverted from the Bitcoin cycle. So just absolute bloodbath on the altcoins for an extended period of time. And then once they turn around for that short amount of time, they fucking rip it, right? They go crazy for a short amount of time. Yeah, when you look at like a Bitcoin chart like this, right? Which this is a Binance chart, so there's not all the data that's included from it. But let me use this tool. Hold on. Date range. So from the highs, and you guys remember the Bitcoin rally in December 2017? That's where everyone started talking about it on the news. It was 375 days 78 days until we hit the low. So approximately a year, right? Give or take a year. And then from there, we find the highs at around 1,057 days. So pretty much 4 years, right? Am I using the right tool here? Yeah. And then once we find the highs until we find the lows, about 370 days, about a year. And then we go for the highs from the lows. And again, about 1,050 days, 4 years. So what people are saying is for probably the next, I don't know, 10 months, correction, right? Which would leave us at around beginning of October next year. Can I get rid of these arrows? I don't think I can. Now the question is it going to happen again? That's the big fight for the narrative right now. Will that happen again? And what new dynamics are at play that would change it this time around? Well, in these cycles here, we didn't have ETFs, we didn't have institutions, we didn't have really the support from a lot of governments either. And people talk about like crypto super cycle. Well, what's that going to take? It's going to take a new all-time high. We get a new all-time high, at any point within the next 10 months, then you could argue that the curse is broken or whatever. And if you altcoins, it's the exact opposite of this, by the way. So these small bars here, this is when altcoins go crazy. Now there is a little bit difference because market making has really taken off in crypto in general, which is probably why that guy has a $500 million long open on Ethereum, because he's expecting this to play out again. But when did altcoins really rally in the past? Not necessarily during the downward period for Bitcoin. I mean, yes, technically here and here is where they rallied, so it would have to be at the start of the new year. The 2017 to 2018 rallies for altcoins started to happen in January of 2018 and really hit peak around February. So if it repeats that, then it would be like, you know, January, February is where we would see the altcoins take off if this all repeats. But you have to keep in mind, just because something has happened in the past doesn't mean it's going to guarantee to happen in the future. And most of the time the market isn't that simple. Sometimes it is, but most of the time it's not. Which is why when I look at something like this, I don't just say, oh, we're in Bitcoin's going to be in a bear market for the next 10 months. I still take it one step at a time, because I don't subscribe to this idea being guaranteed. Because what I know for sure about the market is nothing is guaranteed. I've learned that over the years the hard way. Nothing is fucking guaranteed in the market. Things are changing all the time. Which can be spooky, right? It can be scary, but I don't know, it's one of the beauties of the market. You learn to love it. And by loving it, you respect it. And if you don't respect it, you're going to get ran over. But yeah, here's another example of like just all that volume coming in at the lows, right? And it took a while before it actually led to something big. But you know, if you see a lot of volume coming in when something's like really close to the lows, it's usually a pretty good sign. Those are cute little Pepes. What's up, Okafor? I love the market. Fell in love with it the moment I saw it. Yeah, the market's... Dude, that's why I still, like... I don't know. I still stream and trade, even though I might not have to, because I love this, dude. It's like, what, should I just watch Netflix all day? No, fuck no, dude. This is fucking fun. Pump Fund founder died? What are you talking about, Bugatti? No way. What's up, S-Case? Or I should say the Latvian gem hunter. I'm popping vodka with a cousin, and what I see, notification that you streamed today. Check that clean retest on SMX. Runner still running on that gem. All right, let's see. There's a rumor going around, really? Ooh-wee, look at that, boys. S-Case, the Latvian gem hunter strikes again. What's your, do you mind saying what your average entry is on this bad boy? Look at the Latvian gem hunter. From the lows, it's up 3,600% on that penny stock, baby. Did anybody listen to the Latvian gem hunter? Sven. This guy cannot miss. This guy cannot miss, man. Just ask yourself a question, right? Why is there more people trading this thing than there ever has been when it's fucking crashing? Like, what's the why? Average entry of $4 a share. The Latvian Gem Hunter is up more than 3,600%. 402. The Latvian Gem Hunter is up approximately 4,700% on that position. Well played. God damn. You still have the original position open, but the retest at 96? Oh, this one. Okay. Yeah, it followed the fluidity. You love to see it, folks. You love to see it. I'm guessing you took a lot of profits on the way up, though, so you've just got a small moon bag. Hey man, a small moon bag, a small runner, if this thing keeps printing these kind of gains, who knows? No, I know you had to take profits. I don't blame you for taking profits. I mean, who can blame someone for taking profits when they're up, you know, a couple thousand%? The Latvian sniper sent me their stonk equity curve, and it is absurd. It's absurd. Well done, man. You got anything else cooking? I'm sure everybody in the chat now wants to know what your next play is. Like a true Latvian, sipping the vodka on a Friday. Traxy really wants to go to the Andromeda Galaxy. You guys hear SpaceX might be going public? I don't know if those rumors are true though. Space is fake. Yeah, space isn't real, dude. And the Earth is flat. Don't you know the Earth is flat? Only reason for SpaceX to go public is to extract money from the crowds. That's the reason why any company goes public. Going public is like the same thing as exiting. Hey man, there's plenty of examples where, like, look at Google, dude. At least from the data on TradingView. Listed in 2004, right? Opens at $2, around $2 a share. It's at 309. Jeez Louise. Warren Buffett buys the top of the goog. Oh, Berkshire is actually suffering a bit. Not badly. It's barely anything, but had a little bit of a dump ski come in. The structure looks fine though. Lots of equal lows, but that's fairly consistent with the rest of the market. Like right now, guys, the theme of the last, pretty much since we had the dump at the beginning of the year on the S&P, the theme has been create fragile structure and keep pumping it. It's been such a fucking exuberant, greedy boy rally. But hey, man, those things pump it. They pump it. What I mean by that is like, we keep leaving fragile market structure behind, but the market really doesn't give a fuck. I'm telling you, dude, when we get to these parts of cycles, it's exuberance runs it, dude. Exuberance runs it until it runs out. And the structure's not that bad on the S&P because we had that kick up in November, but it's still a little bit spooky because we were able to at least take out some fragile structure and not fall off a cliff. But like fragile structure being just areas where everybody has the same idea. If it's above there, we're going to keep buying. If it goes below there, we're going to start selling. Which is fine to have that idea, but if everybody has that same idea, we better not go below there. The good news is we had one instance of going below there and the market didn't fall off a cliff, which is a good sign. Because anytime you do that, there's good and bad, right? Anytime you make new lows and sweep out equal lows, you run the risk of it breaking. But if it doesn't break, when you run that risk and it bounces back, that's a pretty clear indication that it's not only going to bounce back, but it's going to run. It's like when something is put to the test and it passes it, there's a good probability that it'll not only pass the next test, but it'll continue to do so until it starts to fail it. And then once it starts to fail it, then we start to put into question, okay, is it going to continue to fail it? And we watch it. Yeah, that's exactly the methodology. It's Splacavelli, by the way, that's how trading works too. The way that the Latvian gem hunter plays the stock market in terms of active investing is the same way that trading works. Taking a bunch of small losses where one winner pays for all the losses. Same thing in venture capital too. Venture capital is taking a bunch of small losses to take one big winner public. That's all it takes. The issue is the normal person doesn't like to lose. Who the fuck likes to lose in here? You guys like losing? So instead of accepting that it's a loss, they'll double down. And it's still losing, gotta double down again. Oh, it's still losing? Well, if we double down, it'll be fine. Sir, we can't double down anymore. We don't have any more liquid yet. Okay, let's take out a loan. Let's double down again. Until busto happens. So instead of doubling down, cut the loss. If you're worth your salt, you'll be able to get it back. Martingale is so good. And what's the worst feeling when you're starting out is you end up cutting your loss, right? Like let's say you cut it and then it just goes like that. That's why you have to follow a plan. You can't make those decisions after the money's at risk. So that's why following your plan is so important. Because how many times, let's say you have a long position set up, right? How many times has price done this and then just done this? And people will manually cut it here because they can't stand the idea of sitting in red. So if you're gonna lose, follow the plan that you set in place. Why are you deviating from your plan? Do you really think that you're gonna be smarter once money's at risk than prior to the money being at risk? If so, then maybe you've overestimated yourself. Because I can tell you that no human out there makes better decisions when they're more emotional versus when they're less, regardless of what the decision is. And what leads somebody to deviate from their plan? There's two things that lead to somebody deviating from their plan. One, they don't have as much experience to see all the type of shit that you can see in the market, which is a lot. The market throws curveballs that you've never seen before, even if you've been in it for a long time. And then the other thing is, probably the more important thing is risking too much. If you risk too much, what are you going to end up doing? You're going to go onto the 1 minute candles and you're going to sweat every single candle on the 1 minute, praying to whoever your God is that it's going to reverse. Or listening to someone else. Yeah, you have to make your own decisions as well. Don't get me wrong, I have learned plenty of things from other people. But I still make my own decisions at the end of the day. It's no one's fault but your own. You can't blame other people. You're never going to improve if you just blame other people. There's always, sometimes you've done everything you can do and you still lose, and that's okay. And that's called variance. It's called variance, man. It happens to every single person in any environment that has risk. From business to poker to trading, VC world, anything where there's any risk at all, eventually you'll lose sometimes. Even in like competitive sports, competitive video games, whatever it is. And that's okay. It's okay to lose. Just make sure that you don't keep doubling down. GG surrender at 20. First blood. All right, guys, go next. Nobody is an atheist at 100x leverage. That's a good one. I think I've heard that one before, but it's solid. So yeah, that's a good question, Splack. You have to decide what your drawdown is. A daily drawdown really shouldn't, in my opinion, it shouldn't be over 3%. 3% is already a lot for a daily drawdown. But like it's starting to push it to the upper bounds. Because I understand if you're on a smaller account, you're like, well, if 3% is my daily drawdown, it's going to take me forever to grow this account. And I empathize with that. But yeah, you don't really want to go over 3%. You can go a little bit higher, I guess. But there's nothing wrong with going lower. Okay, so how many trades should you have open in the crypto market? That is 100% dependent on if you are hedging. If you are not hedging, you are severely limited to how many trades you can have open. Why? Because if Bitcoin dumps, everything dumps. So if you have 10 different longs open on 10 different shitcoins, that's the same thing as having 10x the risk on one shitcoin. Most of the time. Zcash has sort of been an exception to that rule lately, but for the most part, that's the rule. So if you're taking shorts and you're taking longs, then you can have multiple trades running. And it also depends on your style, right? If you're a new trader or like a trader that's not very profitable or maybe not profitable at all, then you should probably just stick to swing trading until you get a better understanding of how to read market structure. It's not until that you have really mastered market structure, and you can't master it, but like, get really good at it. And you understand how to basically, once you get good at swing trading, then you can get cheeky and start to scalp if you want. In fact, I'm going to post on YouTube. Leo worked on the video. I recorded it and then Leo edited it. There's a good example of how I show how you move from swing trading to scalping. But even me, right, I still am susceptible to emotions. And so if I'm not in the right headspace, I'm not going to be scalping. Because that's a slippery slope. But if you've and again, master, I'm using that word sort of incorrectly here because you never fully master it. But if you have a really good understanding of how to read market structure on the high time frame and how to understand what is going to happen likely on the higher time frame, then you can go to the low time frame and try and get cheeky risk reward. And that there's other caveats to that. It becomes very difficult because it goes back to that idea of being okay with this idea of losing. If you're going to be scalping a chart, I hate to break it to you, you're going to get stopped out a lot. You're going to get stopped out a lot. Can you handle the idea of getting stopped out a lot? Bourbon, would you feed Doris if she was hungry? Yeah, of course, dude. I love animals. I'm not like an animal freak where, that kind of stuff, but of course, dude. I mean, humans and animals are monsters in general, but I don't know. The maintenance of a pet is kind of a pain in the ass, but animals in general are dope. How do you take advantage of hedging rather than just having stops? Because if you're hedging, then winning trade will be nullified by a losing trade. Yeah, and that's okay. The way you do that, wow, your name is just a string of letters. The way you do that is take profit. So if a short is working out and you've hit if you have a plan for your short, right? Which includes a profit target or multiple profit targets, which is actually better, but a profit target and a stop loss. Let's say that you have a really basic approach, right? You have, so you're shorting something and you're looking for, somewhere in the ballpark of 3 to 4 risk reward. Honestly, you could go to 2 risk reward, and anything higher. It really depends on what the market gives you, but we'll just put it at a random spot, all right? 3.2 risk reward. You kind of want to keep it above 2 risk reward. Going below that is kind of death by 1,000 paper cuts a lot of the time, but let's say it's like 3.2, and the short works out, right? And now there's maybe a long opportunity forming. If you don't take profits here and you open the long, for instance, and by the way, this is a lot of assumptions because having 2 trades work out back to back on high risk reward is not always the case. I'll just move this up a bit. So now you have like a long position open, right? And same thing, like three-ish risk reward. So the question that string of letters is asking me is, if you short it here and you long it here, wouldn't this just nullify this trade here if it goes up? And that's only if you don't take profits. So let's say that you close, I don't know, 80% of the trade here on the short. Then you open the long, and let's say it doesn't work out. This gets stopped out, but the remainder of the 20% from this position continues to run. So you're not only mitigating the loss by still having the runner, but you've also locked in profit. Now let's say if the long does work out, then maybe you get stopped in profit at some point for 20%, but you've locked in another 80% on the long. And then 20% runner on this one as well. And then you get another opportunity to short. Rinse and repeat, right? Now let's say that you're in a range, and this is going to be overly simplified because it's, of course it's a drawing, right? Let's say that you've grabbed a long, you grabbed a short, and now that you're trading right here, right? Just bouncing between a range. And you don't want to take profits, you want your positions to run. So let's say that you don't want to take profits, but you want your position. So you're long from here, you're short from here, and you're in profit on both. The only thing you want to happen next is not only volatility, but you want it to run. You don't want this kind of shit to happen where you lose both positions. And so where we're at on Bitcoin is we're getting to a point now where I don't think it's just going to be, and I could be wrong about this, by the way, take it with a grain of salt. I don't think we're just going to see this sort of megaphone pattern. I think it's likely going to be eventually lead to either this or this. So that's why I was saying if you're an options trader, it's not a bad spot to set up like a condor. And so if you have longs and shorts open, you'll hear this terminology called net short or net long. Net short doesn't mean 100% short. It means that you have more short positions than you have long positions. And vice versa. If you're net long, it doesn't mean that you don't have any shorts open. It just means that you're heavier on the long side than short side. And why is it important to hedge? Well, I don't know. You tell me. What's Bitcoin been doing for the last couple months? Why is hedging important? Because this happens. And it'll never stop happening. We could, in a bullish wet dream, do this. But guess what? It's still going to happen. You're still going to have this part happen. And you really don't know what straw is going to be the one to break the camel's back, for sure. But understanding local structures allows you to get a good idea. I have 4 hours open. Let me go back to the 1 minute. And if you don't want to hedge Bitcoin, and it's kind of late to do this in my opinion, what you could do is you could hedge using a shitcoin. So you have Bitcoin longs, you have Bitcoin spot, but you short the shitcoins. Like Ethereum, which I don't know if I want to call it a shitcoin, but Ethereum, for instance, I don't think it's a shitcoin, but that's the play. Is you long Bitcoin, short Ethereum, Ethereum short gets stopped out, long on Bitcoin continues to run, or Bitcoin longs get stopped out, and Ethereum dumps a lot more than Bitcoin dumps. The reason why I said it's kind of late to do that approach is because we're actually seeing a lot of strength out of Ethereum these last couple of months. And if the 4-year cycle is to continue, it means that there should be an alt season, which would make it. So it's actually, we're getting to the point where it's almost the other way around, where it's actually short Bitcoin, long Ethereum. A little bit. We're not there yet. It's really hard to call that kind of shit, like nearly impossible. But anytime we see signs of Ethereum showing more strength than Bitcoin for a long, prolonged period of time, it begs the question of, okay, is it time to flip the hedge strategy around? Yeah, Splacovelli, that's the thing, right? And I'm not trying to beat you up here. I'm just trying to use what you said as an example to help other people. If Bitcoin dumps 5%, what do you think the alts are doing? Do you think the alts are pumping to the moon? These market sentiments are married together for a multitude of reasons. Yeah, they're probably dumping 15%, 10, 15%, something like that. So the myriad of reasons, you have some where you have liquidity provision, so liquidity providers are market makers. You have some where it's the downward spiral that I was talking about, which is adding onto positions by selling spot, adding on to leverage positions by selling spot positions. And if somebody is selling their Bitcoin, do you think they're not going to sell their Ethereum? If somebody is selling their stock portfolio, do you think they're going to hold on to their Bitcoin? Because there's a ranking of from beta to alpha risk. Beta risk is the fucking U.S. Bond market. That's the lowest risk you can get, which by the way doesn't even beat inflation, not really. But it's seen as like the beta risk, meaning, you know, there's a pretty high likelihood that the United States is going to pay you your money because they can just print more if they can't. And then you take it to the alpha risk, which is, you know, dog wearing socks, you know, double backflip SPX 6900 Fartcoin index. That's like as far on the alpha risk as you can go, right? And I'm not talking about like, oh, alpha male, beta male. I'm talking about the amount of risk that's associated with whatever you're investing in. Stock market alpha risk, bond market beta risk, crypto market fucking mega alpha, crypto meme coin market. I mean, you're off the charts on alpha risk there. I need my dog coin to pump. Dog coin, go up. But you know, I don't like. I think it's kind of cool too to have those kind of coins as well. I'm not. I know I'm shit talking them, but it's mainly because they're very risky. But there's a soft spot in me where it's like, you know, I kind of like the idea of having you know, random fucking meme coins and shit like that. A lot of people get hurt, but guess what? A lot of people get hurt in the financial markets regardless of what they're trading. I mean, even an individual stock, right? We haven't really seen that happen to the Mag 7, but it doesn't mean it's not possible, right? You think Nvidia can't draw down? What does it take for Nvidia to draw down? People selling, that's it. Is it more complex than that? I don't know. You tell me. This is not a playlist. My YouTube just on autoplay, so the more we autoplay, the weirder the songs are getting. Although that last song was kind of a banger, so maybe we give this one a chance. Maybe the YouTube algo is actually cooking right now. What do you guys think? Is the YouTube algo cooking when it comes to music? Oil went minus, yeah. Yeah, oil looks like dog water right now. Holy shit! Is this a meme coin chart? Yeah, and Splack, here's the silver lining, right? I don't know how big your account size is, but I would say that at least you learned some of the hardest lessons while you weren't managing a fuck ton of money. That's the silver lining, right? You're learning the hard lessons before you're managing a lot more. Without oil prices going up, inflation ain't happening. Well, I mean, inflation's happening right now, but I guess you mean like even worse inflation. I don't know, man. Good old Jay Powell's getting ready to start buying up those US bonds, baby. Traxy, do you have an opinion on the 10-year here? As to why the 10-year yield is still going up? Like, I understand the mechanics of why it's going up, right? Like, people are selling bonds. It just seems a bit odd to me. Do you think it's because of Japan? It's going nowhere for 3 years. I mean, yeah, it's still kind of in it. It's just with the anticipated QE that's coming. I just makes the rates go up. Yeah, I'm just talking about the yield right now, and I've been reading the rumors about how the yield on the Japanese bonds are not going to stop anytime soon. But I don't know, I'm not as smart when it comes to this kind of stuff. Not to say that I'm smart on other stuff, but I'm just less skilled when it comes to the bond market. Come on, Ethereum, you're in do or die mode. Ethereum's got to carry Bitcoin here, boys. The market is on your back right now, Ethereum. We need you. We need you to pump it up. See what's happening locally here. Yikes. It's a battle for sure. Stock market is going to fall. Yeah, people always say that. I mean, I don't disagree with it. I think the stock market will fall. It's just the question is when, right? When will it fall? I've learned over the years, never underestimate the fucking exuberance from in the market. The greed. But also during those periods of QE that you're talking about, Traxy, we saw that the stock market was actually falling, but the stock market's almost at all-time highs and they're doing QE. So I'm wondering if that dynamic is any different this time around, in your opinion. Yeah, equity market was like crashing when they did it in the past, whereas now they're doing it and equity market is gearing up to make new all-time highs. Inflating the money supply, yeah. But if you're inflating the money supply, doesn't that mean that there's more liquidity to buy bonds, which should drive the rates and the yield lower from a mechanical standpoint? I think that just in previous times it was too late when they did it, so the ebb and flow of the market had already spoken. Like once you get big enough fear, it's kind of hard to stop that, even if you do try and, you know, inflate the money supply, because it's so far overextended that that's not going to be able to fix it in the short term. Whereas like this dynamic is a little bit different because S&P is at all-time highs when they're entering QE. So it's kind of like something that is more rare. That's why I was like curious. Another thing about quantitative easing is it's not one-to-one ratio with Fed purchases and increases in the money supply, since they buy from banks, more bank reserves, not money, foreign sellers, etc. Right. 40 billion would be 480 billion since it's going to banks. Okay, maybe 40% of that will increase the money supply. So the Fed might add 1% increase in the money supply year over year. Yeah, that tracks. But then also, if it's only adding 1%, that's probably why it has less ramifications on something. Like if the markets are dumping, right, 1% isn't going to bail it out. If the markets are pumping, 1% might help it pump a little bit more. I guess is the point I'm trying to make. Like once the market has spoken, right, increasing the money supply by 1% isn't going to stop the cascade. It's not going to stop the fear. It's not enough ammo to stop the bear stampede. But if it's already in a bull market when it happens, it might just add more fuel to the fire in terms of pumping it. Certainly would give a lot of people more confidence that it's likely that the rally continues. QE is a very clear. Yeah, I mean, you move into QE when you're afraid of the job market and you're afraid of the stock market crashing, right? But what if the stock market is almost at all-time highs? And while I do agree that unemployment will likely rise, given the data we have on employment right now, it's still relatively low. Like, I think this will probably go up, right? I'm not saying it won't, but if we look at it from where it is right now, in the grand scheme of things, it's still relatively low. So you have relatively low unemployment with stock market at all-time high, but QE is starting, which is normally, that normally doesn't happen. So I'm wondering, because that normally doesn't happen, what's this new dynamic that's going to be at play? And then if it does lead to, let's say, unemployment going down again, is the Fed going to be smart enough to start going back into QT? The thing about, I think, what they're doing wrong is that because they're so slow and they're reactionary, they're never on top of the ball. They're like, I think I said this during FOMC, but they're playing off rhythm because they're going too slow. Did QT have a big impact on the markets the past 3 years? No, but I think it's because of the timing of it, right? Like if they were able to do it in rhythm, then maybe the ROI on equities wouldn't be as high, but the risk of equities crashing would be much lower. Like, for the people in the chat, I'll try and explain this simply, and I might get some things wrong here. But like, if the markets are going good, then you want to sort of use a tool that would not necessarily make them do bad, but give you like a buffer. How do I explain this? So like, markets are doing good, so you have time to sort of raise the rates. Raise the rates. And if markets are doing bad, then you want to sort of lower the rates. The issue is they're playing off rhythm. Like, this isn't a perfect world, right? But they're off rhythm because they react. So once this happens, then they start to do it up here. So by the time this has already happened, then they start to do it. But by then it's too late because the influence isn't as high. So instead of like moving slowly, they should be almost following it very closely. So if the markets are already going down and then you start to do it, well, the market's already spoken, right? This isn't going to help anymore. It's still going to go down. The thing is, though, what we're doing is we're here, we're on the upward move, and they're doing this. So that could lead to like that, which leads to that. And then once you're down here, you can't make it go any lower. So you're fucked. Once this happens, and then this happens, and these are already as low as you can get them. You can't put them any lower to try and help during this period. The only thing that would help during this period, after these have hit their bottom, is printing money. Because this is traded against the currency. It's traded against the dollar. So the only way to save it is to make it so that whatever this is traded against is worth less. That way it naturally will have to go up because of the scarcity. I don't think I explained it that well, and without the audio explanation, it probably wouldn't make too much sense, just looking at what I just drew there, but... So that's why I think, like, with the timing that we're doing it, we might see something like this happen where the markets just fucking roar upward. But eventually it means that we don't have any tools left to save it once it does eventually flow, because it always will flow. There's an ebb and there's a flow. There's always a flow that comes after the ebb. The question is, how long are you willing to put that flow to the side? Then eventually it will come. And when it does come, we don't have any tools left to save it. I don't think there's almost any correlation. The Fed does not control rates and never will. The reason rates go down is because people buy bonds. Yeah, exactly. But, well, I guess your argument is that 1% isn't going to move the needle, right? Added to the money supply. But it's not necessarily just the 1%. It's also the people that listen to the Fed. I mean, all of us, most people in here, we're here for FOMC just to hear Jay Powell speak, and I think a lot of the investor world listens to what Jay Powell says. So yeah, the 1% year over year added to the money supply, or lack thereof, shouldn't have that much ramifications on the actual market, except the fact that everybody's listening to what Jay Powell's going to say and then also doing what the Fed's doing. From a mechanical standpoint, this is how it works. Higher rates, bullish as people sell bonds, which means there is more liquidity for, right? Lower rates, bearish as people buy bonds, which means there is less liquidity for risk assets. Liquidity from the rotation is greater than any. Okay, so lower rates, right? My question to you is lower rates because of, yeah, they want to cut the rates, right? So lower rates. So then why is the yield going up? And your answer was it's just a short-term move, which I agree, but is there a world where it actually continues to go up even though it's something that we haven't seen before? And maybe the cause of that would be foreign investors pulling out of the United States. But if people are expecting growth and inflation, right, so, but, okay, so my question is, if historically, when the Fed cuts rates, you're saying that they don't have influence on the rates, but usually the rates go down over time with QE. liquidity from the rotation is greater than any potential increase in liquidity from lower borrowing costs. I guess what I'm trying to say is we have history gives us examples of this rotation happening again and again and again. I'm saying, what if that rotation doesn't happen because the difference in the dynamics of when they're actually doing QE is not in a downward period, but in an upward period? Right. It happened once in the early 1930s, and that's what I'm saying. And what happened was just like a straight up move into a straight down move, right?